Hello traders and welcome to another video review. Today is Wednesday, October 12th, 2022. Let's find out what is going on the Forex market today to check the Forex calendar. We have some data during the London session scheduled for release from the UK. As you can see, those are very important data. Those data are in form of the manufacturing production, GDP and monthly GDP new change. So as you can see, plenty of very important data from the UK. Then during the New York session, we have the PPI from the US, we have the speech from the ECB President Lagard, and of course the FOMC meeting minutes at 8 p.m, which is of course the event of the day. Let's now find out what is going on the charts, and let's switch to the British pound chart straight on. This is the cable 4-hour time frame chart. As you can see here, I'm using the Japanese candlesticks, and we have a very interesting formation here. We have a first target level. I mean, it might be considered a target zone even, that had been hit here. For the bottom of the wave C, of course we have a bounce from this level. However, then we got big red candle, so I think that this is not the target for the wave C, so it's now invalidated. I mean, it was valid, but it was violated already. And as you can see, just recently, 4 hours ago, we hit the second second target zone, located between 109.19, 109.45. The low was made at 109.23, so that's nice. However, there is still a potential breakout to the downside coming, because it looks like this this bounce here is not strong enough, let me say like that. Of course, the outlook remains bullish. So what do we want to see is a bullish extension to the upside. However, it looks like every attempt of the bulls to rally is ending up with the red candles facing them. So both of these two levels, zones, sorry, has been hit. However, no rally had been performed yet. So what we need to do is to wait for another opportunity to see whether the market wants to go. If we see a breakout above, now let me adjust the levels, let's say here 1.1224, then of course the bounce from here might be the pretty nice beginning of another impulsive wave to the upside. However, without any breakout above this level, we cannot say that this cycle had been completed. And this cycle evolved from the ABC corrective cycle to more complex ones. So it might be kind of a tricky to see where this cycle will be completed. This is of course the channel, as you can see here, but the market bounced out of the channel, I mean broke out of the channel, so it's no longer applicable. These levels here are as well no longer applicable as well, so we can remove those two levels, and of course 127. We will leave 161 because that's the level that we are talking about right now, and we will see what will happen when the market will start to move from this level. Let's now find out what's going on the euro. The euro dollar 4-hour chart doesn't actually move much recently. We possibly made ABC correction to the downside into the, of course, 61% of the Fibonacci retracement. However, this retracement had been violated and the new low was made around here. So that's the, eventually that's the technical support here for the wave C. We bounced quite nicely higher. The local high was made at 9,691. However, as you can see, straight on red candle here, and now the market is locked around the level of 61% of the Fibonacci retracement, and it looks like this market doesn't know where it wants to go. Nevertheless, the market is below 30-day moving 30 periods moving average here is below the level of 50, which is on the RSI, which is the neutral level. So the bears are still in control of this market, and it looks like this market wants to go lower. So any new low made below 9,673 means that the road towards the swing low located at 9,538 is open. So the outlook for the euro remains bearish because there is no big increase, dynamic, aggressive increase from the line of last resort, which is 61% of the Fibonacci retracement. So what is S&P 500 doing? Let's do SPX. S&P 500 index, this is the daily, of course, daily time frame chart. LBC, sorry, 4-hour time frame. Let me just switch to the daily. This is not that much clear anymore. The ABC correction didn't happen. We retraced only 38%, which is another very negative indication for bulls, because this is the very shallow retracement, 3,798. The high was 3,806 points. So right now we don't need it anymore. We are trading below the 30-day moving average. Momentum is negative. Bears have a control over this market. Just recently we touched the lows of the 3rd of the October 2022, 3,576, and it looks like this bearish pressure might result in a test of 50% of the Fibonacci retracement of the whole move to the upside. Let me just show you what I am talking about, because it's a very important level. This is the 50% of the whole move up. This is apparently the this is the post-COVID rally. This is the COVID, okay, and this is post-COVID rally, and the 50% of this post-COVID rally just above the pre-COVID high, which is 3,398, is located at 3,503. So it looks like the market wants to hit this level and wants to test it. So please prepare for another weakness of the S&P 500. What is oil doing? Daily time frame chart of the oil is showing a textbook example of a breakout out of the falling wedge. What do we have here is a rally from the lows of 76.26 towards 93.30, 93.63 even. So towards the well-known supply zone located between the levels of 93.73, 98.35. So this wedge had been completed. We have a breakout. We broke above this levels here. Now the zone between 86.51 and 85.06 will act as the support. So what we should do here is to zoom in, because we don't want to make any mess. So we would like to zoom in, change these lines from the technical resistance to the technical support, because it's obvious right now they would act as a technical support. We have one more here. However, I would move this one closer to that level, because this is very nice zone here between 75.17 and 76.23. So we got plenty of a bullish momentum that had been put into this rally here, as you can see, from the oversold market conditions towards the level of 63 on the positive side of the RSI, which is very nice. That means the market is ready to move higher. However, this is still the most important zone for the bears, and they will defend it, because as you can see, the market bounced from that zone. Once it was broken, it was tested 1 to 3 times, new lower low, and then of course bounce, and again we stopped just at the bottom of this zone. So very big pressure is being put on the bulls around this zone, so please expect a fight here. Of course, breakout above 93.50 1838 is the bullish indication, and the market might hit 104.84 next. So that's the crude oil. Let's take a look at spot gold market. Spot gold market is trading like a textbook, very technical market, very nice market for all of the technical traders, because we are doing all of the textbook examples of the downtrend development. Recently we have a very nice pullback or correction towards the level of 1,728, and since then, as you can see, we made around the 7% of the bounce, okay, and the market of course reversed. So that was the level of local trend line resistance, right around this level. We got some false breakout, however we didn't pay too much attention to it. We already retraced like 50% of this bounce here. Let me just check it if I am looking at these things in a right way. There you go, exactly 61%. So 1,658 is a 61% of the Fibonacci retracement. If we break below this level, then of course we should expect another down move towards technical support 1,640 and 1,615. So please pay attention to this market, because it looks like if we won't bounce from the 61% and it's a last Fibonacci retracement, a road towards the swing low is open. So this and Bitcoin as the last of the today's analysis. Let me just switch back to the 4-hour intraday chart. There you go. And what do we have here? Nothing that looks good for the bulls. We are trading below the short-term trend line, the blue one. We tested the technical support 18,854 was tested before in the end of the September. Now it was tested again, big pin bar. Right now these 4 bars here are still inside of this pin bar, so it might be kind of a pin bar-ish inside bar trading. Okay, I'm talking about this one. So the spread is 19,193, 18,860, and if we won't break one of these levels soon enough, then of course the market will keep trading inside of this zone. So this is the inside bar zone. Momentum is negative, is weak, so the down move is preferred. The downside breakout and down move is preferred on Bitcoin in the short-term target 18,640, 18,563, 18,486. So the outlook for the Bitcoin remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.